Hi, this is Ryan Hillard with the Forward Mortgage Group, and this is the market mortgage rate forecast for the week of November 15th, 2021. As we look at this week, the average mortgage rates were slightly worse to end last week, and that is due almost entirely to some of the strongest inflation data that we've seen in the last 30 years. And so when we take a look at strong consumer demand, we couple that with shortages in the supply chain and some wholesale and consumer inflation, it really contributes and combines all to push rates up a little bit and really reverse course from where they had been starting to come back a little bit prior to then. So when we look at what's happening this week, the average mortgage rate could continue to slowly or slightly get a little bit worse, and just continuing the trend that we saw on Wednesday and Friday of last week. So if you would have been able to lock the rate prior to then, you would have been in really good position. It doesn't mean that you're in bad position now. It just means that the rate might not be quite as good as it was a week ago. And so just to kind of build on some of this, we do expect that the rates will continue to be increasing slightly for kind of the near and maybe even longer term beyond this. So one of the things that we did see on Wednesday of last week is an important item to address is repricing. And so we know that rates they get published every day, and most lenders will obviously only prefer to publish one rate sheet every single day, not including the weekends, of course. But what happens when the markets are more volatile and we see the rates increasing, the lenders will halt their pricing and then they'll publish a new rate sheet. And then that can happen numerous times throughout the day if needed. It did happen a couple times on Wednesday as the markets were deteriorating, and we saw rates increasing. So the lenders stopped their pricing, adjusted their rate sheet, republish their pricing, and that can happen several times throughout the day. It can also happen on the better side if rates were improving as well. In the bigger picture, today's rates are about the highest that they've been in the last 2 weeks, but the movement during the time hasn't really been too extreme, which is the good news. And the average lender is still able to offer rates in the low threes and in some cases the very high twos. What's affecting rates this week going forward, there's really nothing in terms of economic data that's out there. There are some reports that are coming out, but nothing that is expected to be in them that would swing rates one way or the other. And then in terms of the Fed stimulus, the Fed does continue to buy treasuries and mortgage bonds, helping keep mortgage rates low. It continues to be a fantastic time to purchase. It continues to be a fantastic time to refinance. You have not missed out on that opportunity just yet if you are an existing homeowner. And the markets are now prepared with the Fed stimulus buybacks to begin reducing the bond purchases in November, which they are doing, and that will continue through 2022. So if you have any questions on this, if you have any questions on anything else, please feel free to reach out to me, and I hope you have a great day.